60 million tokens in our 6 months of existence, and we offer sort of staking, farming yields, but very different system to Dex. So if you're new to MDB, welcome. We're very strong around community. Today, obviously, we're going to be over in the Dex community come Friday. Today's very much around 6 months is a huge amount of time in crypto, so I'm just going to treat this as if it's sort of a brand new introduction, and it'd be great to get an introduction about you guys as a team to start off with, and then maybe get the background around where sort of DexFinance comes from, and maybe get an introduction to the ecosystem as well. But maybe starting off with personal introductions, that'd be great.
Yeah, of course. My name is Jake, the CEO of DexFinance. Joined here with Jay Demper. He's Mark. He's our COO, guy off the front man. And you might have seen him on some of the live AMAs and such. We've both been in the space for kind of quite a while. I have a background in finance. I traded U.S. Treasuries on the floor of a major exchange for quite a while, and then kind of moved into tech and media. So it just kind of seemed like a good progression when we found crypto. Kind of the rest is history. Jay, I'll let you do a brief intro if you like, and maybe I can go into some of the overview of Dex.
Sure. Myself, I'm a retail business owner for about a decade now in Canada, just outside of Toronto. I'm mostly an investor, kind of just a crypto buff. I'm very interested in this stuff. Getting involved in DeFi has been a huge adventure for me, and an eye-opening experience where, I started off with a lot of more blue chip trading, mainstream crypto. And I've definitely transitioned into more of the cutting edge of what we can try to push with this tech. I'm certainly not a programmer. I'm more of an organizer, and more of an organizer, right?
Yeah. Well, I guess first of all, let me just thank you guys again for having us on. You guys have a great community here, and it has been quite a while. I always, we've done quite a few of these, and I do see some new faces here. So I'll try to get a good enough overview without boring everybody that's heard this, the pitch before. But always appreciate coming and hanging out with you guys. Godfather, I've actually really enjoyed our talks. I guess just a brief intro, kind of how we're here, why we're here, before we get into maybe some of the details. Was as many of you guys know, I'm always very cautious about getting involved with other players in the space, just because the lifespan is so short. But after several conversations with the Godfather and the team here, this just seemed like a really good fit, and we appreciate you guys as one of the other real true builders in the space. So we'll talk about kind of the relationship a little more, but just appreciate some of our recent conversations, and it seems like we have the same vision on a lot of things. But just to kind of give you a background, I guess, on our ecosystem, our protocols. We started about a year and a half ago with a token called DexIRA. At the time, this was like right during the SafeMoon kind of craze, where the reflection tokens were kind of all the rage. We didn't want to create just another meme coin, a fork. So we came up with something a little more like to consider a little more adultish. The DexIRA token is it is a reflection token, but it's kind of made to mimic the age restrictions of say a traditional IRA account, where there's always zero buy tax. So you can always add to your position without being penalized. But then there is a 30% sell tax, which can be waived after 1 year of holding. Right. So it's just incentivizing people to buy in and keep accumulating their position, but then allowing people to get out without getting completely clipped at the end. And we modify several things on that contract. Like I said, we were the first to do a no buy with a sell tax. We also changed the reflections. Instead of just receiving like rebates, is kind of in the same token. We offer a handful of blue chips. blue chip tokens. So just by holding the token, you can earn, BTC, ETH, Matic, about 20 or 30 blue chips, as well as our partner tokens like MDB. So you can go ahead and you can earn your MDB tokens just by holding, which was kind of the first one of the first introductions into our partnership. That was kind of low hanging fruit. Happy to have you guys up there, and we've actually seen some interest there. Quite a few people have already selected that option and are actively earning their MDB rewards. So that's cool to see. That went really well for us. But the like I said, the meme craze, the reflection tokens kind of fizzled out a little bit, and rather than just keep continuing to pump marketing into this one token that and I've talked with the Godfather quite a bit about this, is just marketing alone is really tough in the crypto world. Not necessarily tough to execute, but tough to sustain. Very hard to keep an ROI. So what we did is we kind of went back to the drawing board and decided that really the only way to have a successful long-term business model was to go create products and tools that are actually creating the real yields, which are and that's another buzzword nowadays. People everyone's trying to get the real yields, but this was something we had kind of set out to do long before it was a thing. So the next genesis was the money market protocol, which a lot of you guys are familiar with. As Godfather mentioned, it has some bases in the tomb model, right? It's a seniorage protocol, where we do have a peg token and a share token. However, we just found a lot of glaring issues with that whole model. The peg system, for one, was seriously flawed in that no matter what the TWAP was, it just keeps pumping out tokens, which doesn't take into account for the buy versus sell pressure, doesn't take into account for supply versus demand, right? So we kind of fixed that issue by adding a third token in the DEX ETF, which is the emissions token for that. And essentially what we do is, instead of just continuing to spit out more peg tokens through the boardroom, we regulate that through our own process, which controls the sell volume of the US DEX token, essentially keeping that at a normal range, and then taking the profits from that to pay out users in our ETF token, which removes a lot of the sell pressure from the rest of the ecosystem. So that's really one of the main the big difference between the protocols. We also introduced the Olympus Pro bonding model, which many of you guys have seen. Really proud of that arrangement. I think right now we are the second highest bonded value from all their partners, which is a pretty big accomplishment.
And what does that mean for somebody that's not familiar with the ecosystem? What does that mean?
Yeah, so if you haven't heard of Olympus, definitely go check them out. They're one of the leading industry leaders, especially in that field. Essentially, what they really brought to market was this bonding, and you may have seen it in some of the seniority protocols. Actually, use it. They call them rebates. But basically, what it is it's like a Dutch auction system where we're offering ecosystem tokens, basically for liquidity tokens, and you're by buying these ecosystem tokens, you can get them at a discount on this Dutch auction system. But essentially, what you're doing is we're trading ecosystem tokens for liquidity. So our protocol and liquidity is always going up, and we're able to offer a discount for people that would like to get in at a cheap price.
And when you, I'm curious about this. When you do the trade, you give out ecosystem tokens? Do you then deposit? So I'm guessing, do you sell them for like USDC, or something like that, do you then deposit that USDC into your liquidity?
Yeah, well, we have a couple different bonds right now. We have 3 bonds. One is an actual LP, LP bond, so you can bond our DexShare BNB LPs right into the bond contract, and you get DexShare back out, right? So you're already buying it in half DexShare anyway. You're actually literally supplying the LP that just goes right to the POL, protocol and liquidity. And then we also do have a USDC and I'm sorry, we have right now we have a BNB, and we also have a Dex ETF bond as well. This kind of completes the loop. So when you're getting your ETF tokens, if you like to kind of compound back in, you can use this system to not only compound back in, but also get a discount as well.
Very good. Yeah, no, I was just curious because one of the things that I've seen bonds be used by other protocols, and I suppose maybe playing devil's advocate, and it sounds like yours is different. My concern has always been that does it potentially suck up potential buy pressure if it's effectively an OTC to buy protocol tokens in exchange for liquidity? If that liquidity isn't deposited in the liquidity, then it doesn't impact the value of the other tokens that holders are owning. Sort of a question that's been raised before, but is that I don't, and that might not be the case with your system because it sounds like you deposit into the LP.
We do, but even so, it's definitely a fine line. And we've actually scaled back. When we launched, 6-7 months ago, we started with about 7 or 8 different bonds. We had bonds for the US Dex pairings, as well as the DexShare pairings, and we offered some even for our Dex IRA token. It was actually really great in the beginning because it allowed us to accumulate a lot of liquidity up front, which we still have, and that really holds the price floor when demand was really high. So as demand's really high, there's enough buy pressure to where it's not it's not really negatively impacting it. Obviously, over the last couple months with just downward slope in the markets as a whole, and our own tokens, right? You obviously don't want to be pumping out supply, especially at a discount when everything's going down. So yeah, we've actually heavily cut back recently. We do still have some, but all the supply is regulated. One of the really great things that we've realized with our partnership with Olympus is their as an industry leader, they have not only the infrastructure, but also the knowledge and know-how to be able to like anytime we want to make an adjustment, they run simulations for us and kind of give us their feedback and make sure that we're still within an acceptable range. Olympus OHM was maybe one of the most forked products on earth, right? So there's a lot of people out there that have maybe similar systems, but I can just tell you by on the back end that anyone doing it outside of the traditional or through the official channels, they're really guessing because the math is the math is actually it's not something you would just do with a pen and paper. You know what I mean? So just having that on board is really great, and being able to feel out when we're getting overbought or oversold is really a really good tool.
Very good, very good. And if I land on your so you mentioned before how the similarities between your system and a Tomb Fork, maybe aesthetically, but not in terms of the mechanics in the background, because you've made so many significant changes. I land on your DApp and I see 4 tokens at the top. Would you be able to sort of summarize sort of how each one of those sort of separate from each other and what role they play within the ecosystem?
Yeah, sure. Like I said, after the Dex IRA token, one of the things we're actually really proud of as well is that, a lot of developers might have just kind of scrapped it and kind of moved on. We didn't want to do that at all. We know we have a great base, which has also helped us, in our current situation. Just knowing that we have that base and that we're committed to keeping those relationships strong. But so every token in the that you see there plays an integral role. Like I said, the Dex IRA token is the original one, more for longer term holding. I think anybody who has held from our pre-sale, they're probably up at least 3 or 4x right now just on the reward alone. So it sometimes it's all based on sell volume. So at times it doesn't it looks like it's not coming in. The money's not flowing in, but those add up over time. So that's kind of our long-term investment option. The US Dex token is heavily backed by the Treasury. Very, very stable option. We kind of boast that that's one of the safest options in crypto. That you can rest easy knowing that your purchase price is going to be very similar to your exit price, and still earn up to like 0.1% daily, for a stable pair with very little impermanent loss. Our Dex IRA token actually has a farm as well. It's another kind of a cool feature that we have. You can take your long-term investment option and pair that with the Dex share token, which is the more volatile asset. And it's actually a wrap token, so there's zero impermanent loss. Whatever you put in the wrapper, you can get back out. So that's a kind of a different option as well. And then of course the Dex share token, and this is also another a good key point to touch upon. Obviously outside of all the glaring flaws in the system to begin with, I think the worst thing that Tomb itself even, I think the worst thing that they did was they waited until their emissions period was over until they started building their Tomb chain and life. Luckily enough, we were able to see this happen in real time. So we had set out from the very beginning that we're going to start building these real yield products, so that when the emissions are over, we have some value to the share tokens. So other than pretty much all the other share tokens out there, you can kind of equate our share token to an actual share in the company. So this is it's much more volatile, of course, but the share tokens, the Dex share tokens, is what's going to allow you to earn that long-term sustainable revenue. Right? We say like the emission stops in 5 months now maybe, which will obviously stop being inflationary and then become deflationary at that point, which a lot of the sell pressure comes from right now. But the revenue from these products that we're building right now, that's indefinite, right? And then finally, the last token is that ETF token. That's obviously something that we are actively expanding on, that we'll kind of get to in a minute. But that the ETF is in all sense of the word, it's really a basket of blue chip tokens. So essentially, you're getting a receipt token for your share of the ETF, which you can go ahead and burn those tokens for a particular asset, BNB or USDC, right? But you can also go actually redeem the underlying assets inside the ETF and walk away with XRP and
Bitcoin, Ethereum.
the hard assets inside.
Very good. Very good. And how would you, I suppose, like a simple question, and I think maybe this sort of, actually, before I ask that, I am interested actually in your US Dex token. So that's got liquidity 3.2, market cap 3.3, and that's because it's USDC paired with US Dex, and the value of the US Dex is over collateralized, right, by other assets. Is that correct?
Yeah, I wouldn't say over collateralized at this point. But it's it's collateralized enough to where there's really no need to worry. We could always move some things around, and part of one of our new initiatives is to fully collateralize it and actually turn it into more of a. At some point, we'll migrate that to like an actual one-to-one backed coin where there'll be zero risk of movement, but yeah, it's definitely the most stable in the ecosystem. Kind of tried and true over one of our best selling points is that we've been above peg and maintaining a very tight range for almost 7 months now, I think. So
yeah, I really can't understate that enough. I think it was Grover. Someone was putting out a stat the other day that it's like up to 488 seniorage protocols that have launched. We're the only one that's been able to maintain peg to date, and we've never lost it either.
Good. Very good. So if and maybe this is a good segue into the vaults. If I land on your website, I look at the D app. How would you recommend somebody new to your protocol gets involved?
Yeah, that's a good question. And I guess one of the things when we first started out, we had one of the hardest things to do was to explain all this to someone new coming in. It's great that everyone's here on the AMA listening to all the details, right? But the average user doesn't necessarily want or have the time to go through all this stuff. Even if they did, it's still fairly complex to understand. Which was one of the one of our still to this day our primary mission statements is to make this world of DeFi more accessible to people. Anybody who was here for the tomb season, and honestly, it seems like every 6 months or so there's another new innovation that comes around, right? And everyone who's all the true DeFi real deep users, they catch the wave first. They make a lot of money, but it's really hard for the average Joe to come just step in and kind of know what to do. You get sucked in with these crazy high APRs that sound really great. In theory, when you look on a screen, it says 2,000 APR or APY, and but when you actually put your money in there, if the price is dropping faster than your APY, then you're not actually making money. So this was one of the things we really wanted to focus on, which we've kind of done with the vaults. If you are an experienced investor, you're welcome to navigate the protocol. We're not shutting any of those aspects down. If you're super ultra conservative, you can go directly into our US Dex USDC pool. It's very stable returns, and your initial investment is very secure there. Whereas if you're more of a gunslinger, quote unquote, you could go right into our DexShare pools, either the liquidity pools or the single stake, and just to earn the ETF tokens. All good options, but what we've done with the vaults is essentially we've come up with different strategies. Basically a yield optimizer, right? An auto compounder that I'm sure you guys are familiar with, similar to Beefy, right? But the big difference is rather than just having one investment in a single LP or a single pool, where your rewards are just singularly compounded back into the same pool, you are able to select multiple farms, multiple pools within the same vault, and then within that vault you can select an allocation between those tokens. So in our case, you would maybe do the US Dex USDC pool, you would do the DexShare BNB, and then you do a DexShare single stake. The advantage of doing this is that you could have, if you have, let's say, 50% in the US Dex USDC pool, when the market's going down, the vaults are going to auto balance for you, right? So when the market's going down, you're going to be accumulating more of that high value asset. which means when it comes back up, you're going to gain more on that valued asset. And on the reverse side, when the market's going up, it's always shaving those profits back into your US, US DEX USDC. Coming out with the Pro Vaults very soon. We've actually spent a lot of time going through like actual backdated testing models, where we've kind of gone through all the Pancake Swap LPs and pools and put those into a simulation versus in our vaults versus individual vaults like Beefy. And what we've realized is that literally almost every single use case, every single period, you can make between 4 to 8% more money just by being in the vaults and having a split allocation than you would by just holding those in 3 separate vaults, or even just holding BNB for that time period.
Good, yeah, and we've got a few questions from one of our community members. So if you don't mind, I'm just gonna. There isn't actually that many questions. Normally, there's been a lot of questions around Dex since we announced the partnership and the vaults, and now you're here. As ever, everybody's gone a little bit quiet. So bear with me 2 seconds. I'm just gonna find the.
Maybe we just explain it so perfectly.
Yeah, maybe that's it. That is it.
Yeah, I mean, well, honestly, that's the thing. Really, that's what the vaults do. Is that you may have a lot of questions, and we're happy to answer whatever you got. But like I said, if you don't, if you trust the vaults, then all you have to do is just pick a risk level and ape away, and you'll see exactly where you're at. Also, one of the cool, just quickly, I guess one of the other cool features, amongst others, is our performance metrics. So, like, if you go into Beefy or Yearn or any of the other vaults, right? One of the things we just found crazy that no one keeps a performance chart on the individual investment. So, if you're in Beefy, it just shows you how many rewards you've gotten, but you don't see your actual position, right? So, even on any of our vaults, you could put in $1,000 and you'll see that over time and know exactly where your money's at.
That's pretty cool. I'm just going to ask a few of the questions that we've got now. There's a few more coming in actually. So. Here we go. Some great questions actually now. So first one, so how much is US DEX collateralized percentage-wise currently with all the stable coins combined in the pot?
Yes.
Native tokens from a percentage point of view. That's one of the questions.
Yeah, we're just about over 50% right now, and growing on that number. But that also doesn't include like team funds and other things like that. So we're probably closer to 70-80% all day. But as I mentioned, that number has been going up pretty consistently.
Good. And does that, as you're paying 0.1% a day, is there a risk that you're diluting quicker than that can go up? Are those two kind of working against each other?
Well, so again, this kind of goes back to the one of the major flaws in the 2 model, right? We started really over collateralized because we were the range was up at 1.4. So as we're selling the US DEX to keep it at that range, the difference between 1.4 and 1, where it's collateralized at, is we're making 40% every time we sell. Now that we're down in a little more acceptable range at 1.05 to 1.1 ish, the margins are smaller. So each sale is not quite gaining as much, but yeah, over time, that's kind of where the buildup comes from.
Answered. And a second question from the same chap is, what are your, as an organization, what are, you talk about revenue generation a few times on the website and verbally, what are DEX's ongoing revenue generation sources, and on average, how much are they earning for you per month?
Yeah, so it's a good question. right now, and if you go on the app, you can see where we try to be very transparent with that. You can even go inside on the homepage of the app. You can see our you can see all the key performance metrics, the KPIs, and there's even little rollovers. You can see where little tooltips, right? So in our revenue, we're currently at about 110,000. That comes from our some of the burn fees from the Dex ETF, our Dex Bet program, the Dex vaults, and some of the Dex IRA held in the treasury. But a vast majority of that is from the Dex vaults. I think before the vault started, we were probably about 30,000 in there.
110,000 per month.
Well, no, that was, like I said, that's all time. But the first 30,000 was over like the first 5 months, right? And since the vaults have popped up, that extra 70,000 is from that primarily. So that's the vaults are our main focus right now. I don't want to be too overzealous with it, but basically we're very confident with our projections for the future. They are, and it's all relative, I guess, to what we're doing now. Probably near 30 to, let's say, 30 to 40,000 per month. At like
when you say you're very confident, you mean confident about future revenue generation, right?
Right. So I mean, based on our current TVL on the vault and based on our our current revenue model, we can kind of extrapolate that to to a larger TVL. So when we launch these Pro Vaults very soon, we kind of know we already have projects lined up. We have several very big names that are kind of waiting to see our proof of concept here. So we can kind of estimate, extrapolate, out of 2 million TVL on the vaults right now. If you widen that out to 10 million, 50 million, 100 million, the curve starts going way up, and it's more than the emissions that we're putting out right now, basically, even through the Dex share, which is why we're pretty confident about it.
Very good. And the last question from the same person is: how many customers have you, which touches kind of on where you were, how many customers have you got confirmed with both the Vault Pro and ETF Pro that's upcoming?
To not get too specific, we have a handful of customers talking to, and then we have a couple that are definitely confirmed and are just excited and waiting for us to release these products. But a number of the potential partners that we're talking to right now, they're waiting for, like Jake was saying, they're waiting for that proof of concept to release. But then they're also super eager. One thing I can say, we don't want to get specific because with some of them, they're not wanting to announce it until it's announceable, right? One thing I will say about those partners is that chances are everybody in here would recognize a lot of them.
I'll say this: we probably have at least close to 50 million in TVL in project. Not to say that 100% of that TVL would join the vaults, but projects with adding up to at least 50 million, and that's at a modest guidance, I guess. Our first milestone for internally, I think, is 100 million in our personal in our TVL in the vaults, and I see us getting there very quickly, we'll say.
Good. A nice blunt question from one of our community: how does this help MDB?
Yeah, no, I love it. In fact, it's a good segue into kind of our our initial partnership. I guess you guys have probably heard the announcements, but maybe Gaffa and myself, we can kind of explain that a little bit more. Aside from, ongoing kind of discussions on how we can kind of build together and kind of build out some more full featured products for each of our ecosystems. I guess the first kind of baby steps into that was the MDB vault, right? So MDB has their own vault in their own Dex vault on our platform, and basically we both sides have both committed an investment into those vaults, where all the profits from those vaults are now being put towards the MDB ecosystem. So and you guys can go see, we just added on our DAO page, we added an investment section where MDB is up there. You can see our investments in real time. I think I just brought a few hundred over today, actually, taking out profits from our vaults into the Infinity program. I know Godfather could probably give you a little better analysis on the Infinity token and how that's being used, but from our standpoint, basically, like I said, we made an initial investment in both Infinity and MDB, and essentially we're just taking all of our profits from the MDB Dex vault. We're buying Infinity tokens, and then the Infinity, and then staking them. So the MDB that we're earning from Infinity, we're then just restaking right into MDB. So I guess the idea is, as I'll let Godfather speak to that a little bit more, but the idea is, as we're continuing to purchase MDB tokens and staking them, for the Dex treasury, and on the MDB side, you guys are also taking those profits to continue to buy back the Infinity token, and I believe burn them. So at the end of the day, it's going to be decreasing supply and creating more consistent buy pressure. This is also a longer term investment for us. I know the Infinity token is kind of meant to be more of the swing trade type of token, lesser fees. But for us, we're just kind of accumulating, so you don't have to worry about us dumping on you.
Yeah, and it's a good summary. I think from our perspective, we've got two funds in the ecosystem. If you're new to MDB, we've got Fund 1, unfortunately, is down nearer sort of about 2.1 million at the moment with the dip in the market the last week. And then Fund 2, which is the Infinity Fund, and both of those, the MDB fund is focused on MDB and it's called the Trust Fund, and the Infinity Fund is focused on Infinity. The clue's in the name. The Infinity Fund is around 1.15 million at the moment. I think we've got circa about 100k invested into the Dex vault, and then we're actually not at the moment. We're doing a lot of compounding right now. I don't think we've actually taken anything out of it, but obviously the intention is 50 million of TVL is going to pump in from these new partnerships, and we've been compounding like crazy, and we're going to see this crazy J curve on all the compounding we've been doing over the last few weeks. So that's the strategy. But in all seriousness, Infinity is a very low tax, only 5%. It's got a small LP with a very large fund backing it. It's from a price point of view, it's struggled a little bit over the last couple of weeks. So what that means is that the market cap is not far off 100% backed actually at the moment. It offers pretty high rewards for staking. It's probably the largest single stake in ROI you can get on Xenu at the moment, albeit you do have to pay a tax to come in or out. So if you go in, you stay in for a while, but you get really good rewards. And again, that's just to protect the APY that are long term. Similar to your token you said, where the tax disappears after a year. Our system is designed in a very similar way with single staking and also the farm, where you go in and there's a barrier to entry, but once you're in, there's great rewards. If you want to just speculate in and out and be very short term in your behavior, then it doesn't pay so well, and that's because our system is designed really to reward long-term investors. We're in it as a team long-term, and and we want investors that are also thinking long term as well. So that's the way it's designed. So yeah, it's a synergistic system. Let's say where we're investing into Dex, and then we can use the returns to buy back and burn. It's super deflationary actually. Infinity's been burning down at a ridiculous rate. I think we had sort of, I suppose, a non-organic burn of 15% of the supply, but on top of that, already in 2 months, we've burned another 9.46% of supply. When the price stays very low, it just means that we can just buy up and burn so much of it without really affecting our principal fund. So yeah, hopefully that's a decent summary. There was a few more questions that we've got.
Actually, real quick, let me, if you don't mind, I got a
Sure.
couple points to expand on that too. You know, that, at a high level, that's kind of the current situation, current arrangement at the moment. But a few other things to consider too, because you guys created that vault, right? So one of the things that's unique to the Dex vaults, outside of, you know, social sharing and the profit taking and all this, the vaults allow basically any user to create any vault that they'd like. But for this, right? So when you guys went and created your vault, you published it. That now makes it open to the public, so anyone can invest in that vault. You know, we as an organization have put our treasury funds into it, and I'm sure some of your people, you know, just coming into the ecosystem, you know, can see that vault. But for doing that, for creating that vault, you now also get 1% of the total profits as a kickback for creating that vault. So a couple things. Well, one is not only you guys are making a little bit extra profit, so that extra 1% is then going back to burn even more Infinity tokens, but also you know, the pro release and all the revenue that we're creating from these vaults. You know, as that number grows, we are starting to put that more into the ecosystem. So all the fee revenue is basically split into thirds. A third to continue to add collateralization to US Dex, a third to add liquidity to DexShare, and the other third for just buybacks as well. So at the end of the day, what's good for Dex vaults and those fees are also good for your vault, you know, the MDB vault specifically, which in turn drives up your investment as well as creates more burning, in essence, for the Infinity token.
Very good, very good. So a couple of questions. There's a few more questions coming through now, actually. So number one, what will happen to the farm regulation after DexShare emissions stop?
So this is the whole idea. Is we don't have a. I don't want to say specifically what's, you know, a very narrow focus, but essentially nothing. The plan is to keep that kind of going forever, and in fact, we'll probably expand on that quite a bit. You know, with the Pro Vaults and the ETF Pro launching, basically, we're much more flexible to add more ETFs and things of that. So the idea is for the next 5 months to use the revenue generated to kind of bolster the ecosystem, get fully collateralized US Dex, add enough liquidity to where the protocol can own it all itself, where you know, we don't need community participation for that aspect, and at the same time create enough revenue where at the end of that period we can just use all those fees to buy our own ETFs, multiple ETFs, where essentially you can just stake your Dex share for a percentage of the revenue.
Very good, very good. And there's another question. Okay, so you're confident that the APR can stay the same then? At the moment, it's about 0.33. That was another question from the same chap.
Yeah, I mean, you know, APR is a funny thing, especially with this model, because obviously it depends on the price of Dex share, the price of the ETF, right? But yeah, I think you know, our like I said, our our projections for revenue, we're expecting to exceed revenue. We're expecting revenue to exceed the current emission rate at the moment. You know, yeah, I think we should be in that same range, if not more. And also, there's some intrinsic value as well, just by having, if like right now that everyone knows the emission's going to stop in a year, right? And it's good to know that, because you don't want inflationary forever, right? But if you know that there's a solid framework and products, and the Dex vaults are just one of several products that we're working on right now. If you know that there's sustainable revenue, and that yield is good for an indefinite period of time, and it's real yield, it's not hurting your token, you're not hurting your own bags by dumping it. Those are all major benefits of long-term farming.
Yeah, very good. And there's another question: when MDB ETFs? And I think that's a topic of discussion that's ongoing, Gayan, just so you know.
Yeah, maybe we'll have something for you guys on Friday.
Yeah. Cool. There's a few more questions. Are you happy to answer a few more questions?
Yeah, I got time. Let's go.
Excellent. Some of them are just statements, actually. I suppose, yeah, you've got your team are answering the questions in the chat as well. Actually, maybe they've got stuff on. They want it out of the way. And I think there was a question around, how many new partners are you looking at the moment? But it's already been answered in the chat by the team, saying there's 5 to 7 potential partner projects at the moment. Is that right?
Let me put it this way, guys. So the vaults don't actually, we're not creating our own pools, right? We're a yield. The vaults are a yield aggregator, right? So even when you deposit into the vaults now, it's not like you're not depositing your money into a new emissions plan, or anything new that's not already in existence. What happens when you go through the vaults, basically you're just funneling your money through the vaults and back into our the exact same farms that everyone else is using. The vaults just let us manage the balancing and the compounding and the profit, all that for you, right? So with the Pro Vaults, nothing new will change, except the amount of farms and pools you can put into it, right? So like we mentioned, we had to have a handful of partners already set up. We have a handful of bigger names that are looking to see how this works on a larger scale. So we'll be launching with every farm on PancakeSwap, plus a handful of partners that we've spoken to directly. But that said, like we didn't PancakeSwap is one of the largest in the industry. They won't even talk to you unless you're in the top 5, right? We didn't necessarily get PancakeSwap's permission to put them on there, but this is all on the blockchain. They don't, we don't need anyone's permission. So, if there's a protocol or something that you guys really like, in theory, we could just add them, right? So if you want to farm, I don't want to put any names out there, but realistically, the potential for partnerships is somewhat infinite, right? Basically, any farm on the blockchain, we can add those to vaults. The advantage of having a one-on-one partnership like we do with you guys here at MDB is that one, you guys can split in the revenue sharing, and 2, it helps with some of the marketing arm, right? So in our eyes, we're really not too concerned with the the number of partners, right? Because like I said, we could have every farm on the blockchain, on all the blockchains basically, when we launch. But we're going to take somewhat of a systematic approach to it, and try to form those one-on-one relationships so that we can get their communities involved as well.
Good, very good. I think in terms of community questions, we're all questioned out. I'm really interested. I know you've got so much launching anyway, but from private conversations, I think you guys are always you're innovators, and I think what you do. What you do from a product perspective, as I've told you privately, is always exceptional. Where do you see yourselves in sort of 5 years? What's the long-term journey for Dex?
Yeah, I mean, I kind of mentioned this at the beginning, but we really feel the only way to really guarantee success is to make new products that are kind of disrupting the market, and tools that can be used, not only internally but externally as well. We really want to build infrastructure that's going to support the next wave of DeFi, and help people to not only make more money but also kind of bridge that gap between the traditional retail investor and this kind of new world of DeFi that's really exciting, and has just a real potential for larger gains that most have seen, but at the same time in a responsible kind of manner that people aren't getting wrecked by by these crazy high APRs and such. So I mean, like I said, our first initiative was these vaults. And I know everyone's been kind of waiting for the pro vaults for quite a while. We're almost there. We've actually the audits have taken a little longer than expected because we're dealing with the bigger names in the space, and they need all the kind of there's technical testing that needs to be submitted and stuff, which is good overall, right? It gives us a more secure platform, a little better peace of mind. But we're still that's still our full focus right here on the vaults. But the next, on our roadmap, then definitely the next two things is Dex Swap and Dex Bank. We want to keep adding to these tools where people can manage their DeFi journey. Actually, we've had some minor conversations recently in a couple of the channels on our server recently, but even everything changes, right? We had planned to do some interesting things with the Dex Swap, which is kind of already underway. But in light of everything that's happened the last couple of weeks, we've kind of pivoted a little bit to create still a swap, still a Dex exchange, but we have some new ideas now for creating somewhat of a hybrid between a centralized exchange and a decentralized exchange. Everything all completely decentralized, of course, but with more of a kind of a look and feel of a centralized elements to allow for more retail investors to kind of get in without having to navigate through all the the seed phrases and stuff like that. So we just want to make the space more accessible and create tools that are going to help people.
Yeah, very good, very good. No, great stuff. Well, look, I appreciate you guys coming over, and obviously we'll be over with you on Friday, and yeah, fingers crossed with we'll have some even more news about the partnership come then. But obviously from an MDB perspective, if you're going over there, I think the Vault is an aggregator of different products, and if you use the MDB Vault, you're helping MDB whilst also helping yourself. It's actually designed by Adam, who manages our treasury. So that strategy, not only have we designed it, but also as a protocol, we do also benefit. If you're looking for an easy way in, then the Vault is a very good way of doing that. It's basically like a spread of all of the assets, right, in one single place. So yeah, guys, thanks a lot again. I think we've had nearly 50 people at some points during this. So yeah, great turnout, and really appreciate you taking the time.
That's awesome, man. I appreciate you guys having us, and we look forward to discussing a little bit more about your ecosystem on Friday.
Stuff. All right, take care. Thanks a lot.
All right, guys. Talk to you soon.
Cheers. Bye.